You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Thursday, 14th day of November, 2024. Thursday means it's members only workshop tonight, 8 p.m. Eastern. Members, please have your questions ready. And if you've been on the trial and you're not yet a member, it is a members only workshop. So all you have to do is send an email to support@cfrn.net. In the subject line, put, "I want to become a member." Valerie will send you the information via email that you need to become a passport holder, and then you will be in the members only workshop with us tonight, 8 p.m. Eastern. And everyone else, thanks so much for joining us today. Whoever you are, wherever you are, we're just glad to have you right here or right now. We do 2 live broadcasts every trading day. The first live broadcast, that's for members only, and those who are taking the 1-week free trial. If you have not yet taken your 1-week free trial, go to mytradingiq.com. At the top of the page, there's a link. Click it, fill out the registration form, hit submit, and we'll get your indicators indicating today. Your trial will start tomorrow, and it will run all the way through next Wednesday. Let's see, you'll start Friday. No, it'll run through next Thursday. The weekend doesn't count against you, but the weekend does give you an opportunity to get familiar with the indicators, and there are some markets that trade around the clock, 24/7, 365. They never sleep. So there is 2 different ways to join this afternoon broadcast, which is open to the public. And by open to the public, I mean everybody, everywhere on planet Earth with an internet-connected device. The best way, you only have to do it once. Go to mytradingiq.com, scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. That will get you into the room right now. And every trading day going forward, you'll get an email about an hour before this broadcast starts. In the email, there will be a link. All you have to do is click the link in the email at 12 noon Eastern, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box so that you can ask questions and participate in the discussion. Now, there'll be days, of course, that you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, want to get caught up later. You can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. It's the Christian Financial Radio Network. But all you got to remember is CFRN. You've already got the YouTube part memorized. Not only do we broadcast live every trading day, as we're doing right now on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but just pick some days. Check us out. Watch a little bit, jump to another day, week, month, year. You get the idea. The more recent episodes, of course, will be more relevant to what's happening in the markets right now and also in the world. youtube.com/CFRN. This is our daily schedule for the afternoon broadcast. We start out with our daily devotional, word of prayer, a little news, world news, market news. Then we do a recap of the alerts, the Logic 247 and the Concierge Trade Alerts. And then about 15 minutes into the broadcast, Michael will join us to give us a recap of what happened this morning in the live training room. Then we'll do some live trading on the TradingView platform for 30 minutes. And then I'll wrap things up with our good word for the day. So let's dive into the devotional. Now the topic, we're on day 4 of 7, is Average Joe. It's based on a true story of a high school football coach who had a habit of praying with his players midfield after each and every game. Turns out some politicians, some bureaucrats, and some parents didn't like that. But Joe stood his ground. Today's scripture is 1 Thessalonians chapter 5, verses 16 through 18. I'm going to share with you from the Message translation. Be cheerful no matter what. Pray all the time. Thank God no matter what happens. This is the way God wants you who belong to Christ Jesus to live. Again, 1 Thessalonians 5, 16 through 18. So on day 4 of this topic, Average Joe, a promise made. After retiring from 20 years in the Marines, Joe was not entirely sure what the next part of his life would look like. An unexpected offer to be a high school football coach seemed random and almost ridiculous. But Joe decided to take a step of faith. He promised the Lord that no matter what happened, he would give him thanks at the end of every game. It was a simple yet sincere commitment born out of gratitude. It took some time to gain the trust of his players and fellow coaches. But Coach Joe became a trusted and admired leader. His genuine care for the boys went beyond football. He sought to understand their struggles both on and off the field. As he encouraged them to push through their own battles, he modeled resilience and faith, reminding them that their worth wasn't defined by wins or losses, but by their character and effort. As he promised God, Coach Joe knelt at midfield to pray at the end of every game, regardless of whether they won or not. He never invited or pressured anyone to join him, but players asked to accompany him because they recognized there was something special about Coach Joe and his relationship with God. Here's a few things for you to reflect on. 1. When have you felt called to take a risk or try something new, even if it seemed uncertain? 2. What qualities are essential for effective leadership, whether in sports or other areas of life? And 3. How can public displays of faith bring positive change to your community? Pray with me. Heavenly Father, we come before you with grateful hearts, embracing your command in 1 Thessalonians 5 to rejoice always, to pray without ceasing, to give thanks in all circumstances. For this is your will for us in Christ Jesus. Lord, we lift our voices in constant praise, finding joy in your presence and resting in your unfailing love. And today we bring before you our new president and his cabinet. We ask for your divine safety, protection, and wisdom over them as they embark on their leadership journey. Guide them with your light, that they may walk in your ways and lead with humility, integrity, and compassion. Surround them with wise counsel and open their hearts to seek your guidance in every decision they make. Grant them the strength to navigate challenges and the courage to uphold truth and justice. May your peace guard their minds and hearts, empowering them to foster unity and serve the nation with a spirit of selflessness and grace. We place our trust in your perfect plan and continue to pray with hope, knowing that you hold all things in your hands. It's in Jesus' name we believe and pray, and everybody said, Amen. Amen, and happy Thursday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 94 points. The NASDAQ is down 42. S&P 500 down 15. And the Russell 2000 down 14. No movers, no shakers, but they're all the same color. And as futures traders, that's what we like to see. In the commodity basket, crude oil up 19 cents, trading 68.62 last. Gold down again, $6.60, trading 25.80 last. Silver down 6 cents, trading 30.59 last. And as you can probably hear, it's trash day in my hood. That's the monster truck outside picking up the garbage, taking out the trash. All right, in the Asian markets at the close, the Nikkei dropped 185 points. The Shanghai fell 59, and for the Shanghai, that's 1 3/4%. The Hang Seng fell 387 points, almost 2%. And in the European markets at the close, FTSE up 40. The DAX up 260. Now for the DAX, that's almost 1.5%. The CAC up 94. And again, that's almost 1.5%. So we had a red day in Asia. It was a green day for the UK. And so far, it is a red Radio Thursday here in the US of A. Let's get to the news. Well, it turns out that the House Republicans will keep their majority position. The news gives the party command of the House, Senate, and presidency. That's a political trifecta. Democrats secured at least 208 House seats to the Republicans' 218. There's still 9 races uncalled at the time of this article. The news came as Republicans held secret ballot votes for House and Senate leadership, with Senator John Thune tapped to replace retiring Senate Majority Leader Mitch McConnell in January. House Majority Leader Mike Johnson won GOP approval to continue in his role. Republican majorities in both chambers could pave the way for President-elect Donald Trump to enact his legislative agenda, including tax cuts and immigration reform. Separately, Trump announced Representative Matt Gaetz as his pick for Attorney General. That one requires Senate confirmation. The announcement prompted Gaetz to resign immediately from Congress, effectively ending the ethics probe against him. Gaetz was the subject of a since-dropped Justice Department probe and led the effort to oust former House Speaker Kevin McCarthy. Trump also announced Senator Marco Rubio as his pick for Secretary of State, and ex-Democrat Tulsi Gabbard as Director of National Intelligence. Take that, Mark Cuban, who says Trump's afraid to surround himself with strong, intelligent women. Of course, both roles require Senate confirmation. We'll see what happens. We talked yesterday about Amazon decking the halls, but it's spelled H-A-U-L. Amazon Hall launched yesterday. That's H-A-U-L. A new low-cost digital storefront for U.S. mobile users. The new feature promises prices below $20 for a variety of household products, with free roughly 2-week shipping on orders over $25 and free returns on items over $3 within 15 days. The product launch from the U.S.'s largest online retailer comes amid growing competition from China-based e-commerce platforms Temu and Shine, who gamified user interfaces and low-cost products which have earned a quick, widespread user base in the U.S. I got my first package from Temu yesterday. I told you that I was going to give it a test. I got a handheld ham radio. I got this thing that, you know, when you go to the mechanic, they have this little deal that there's a thing under the dash of your car, you plug it in, and it gives you a code, like when your engine warning light comes on. You can plug it in and it'll give you a code, and then you look up the code and that tells you, you know, what's wrong or what's broken or what needs to be serviced. I got so much stuff I can't remember it. I think I only spent $40 because they kept giving me free gifts, and I got about 4 pair of sunglasses that look just like Ray-Bans. In fact, 1 pair even had wood grain earpieces, or the handles on the, you know, things that go over your ear. I gave that pair to my wife. I don't know. It kind of felt like Christmas when I opened my package. I couldn't even remember the stuff because they gave me stuff and they said, "Oh, if you order one more thing, we're going to give you this." And so I've got my box here, and one day at a time, I'll take out each new toy and play with it. So analysts say that Hall's interface resembles the gamified grid of Temu, and that its longer shipping times suggest Hall's products will likely ship from China. Wonder how that's going to go with the tariffs. We'll see. Okay, off to the markets before we go to the charts. In the news, October inflation readings out this week have shown little progress toward the Fed's 2% inflation target, putting in question how deeply the Federal Reserve will cut interest rates in 2025. On Wednesday, the core CPI, which strips out food and gas because we don't ever use that, showed prices increased 3.3% for the third consecutive month during October. Then on Thursday, the core PPI, which is the producer price index, revealed prices increased by 3.1% in October, up from 2.8% the month prior, and above economist expectations for a 3% increase. Put it all together, and the readings are adding to an overall picture of persistent, sticky inflation within the economy. Economists don't see the data changing the Fed's outlook for the December FOMC, and markets agree with the CME FedWatch tool, currently placing a nearly 80% chance the Feds will cut rates by 25 basis points at the December meeting. But after that, it might be a while before we see another cut. As mentioned, the House of Representatives is now under GOP rule beginning next year, cementing Republicans' unified control of power across Washington. This is like a once-in-a-lifetime chance. Now, actually, Trump had this once before, but then the midterms threw a monkey wrench in it. Let's pray that doesn't happen again. As the party closed in on the win, the leaders have been openly planning their agenda in expectation of what some observers have termed a GOP trifecta, alongside already established party control of the Senate and White House, or more bluntly, a full Trump scenario. House Speaker Mike Johnson posted, "The American people have spoken and given us a mandate. We will be prepared to deliver on day one." Now, this one got me scratching my head, but Advanced Auto Parts. Their shares surged after the auto retailer announced plans Thursday to close hundreds of stores as it posted a surprise quarterly loss. So they lost money, forcing them to close hundreds of stores, and the price of their stock's up $1 today, a little over 2%. As part of a new 3-year turnaround plan, the company intends to reduce its U.S. footprint by shuttering 523 Advanced corporate stores, exiting 204 independent locations, and closing 4 distribution centers. The retailer reported a surprise third quarter loss of 10 cents per share versus expectations by analysts of 52 cents profit per share. I'm telling you, this is not your father's market. It used to be bad news, the stock went down. Good news, the stock went up. Copper. Got any copper pennies? Well, they're not worth as much as they once were. Copper headed for a 7th consecutive weekly fall, weighed by a weaker outlook for Chinese demand and a post-election dollar rally. Futures on the London Metal Exchange have dropped almost 8% since November 5th. Concerns about demand recovery in China, the world's top metals consumer, have led traders to look for clearer signs that the government will roll out more policies, such as infrastructure investment, that will boost commodity demand. China's copper importers are already reining in the amount of tonnage they buy for 2025 through annual supply contracts and opting for spot supplies instead, giving the markets a state of flux, according to Bloomberg. Also hitting copper has been a rally in the greenback following the re-election of Donald Trump, as traders bet on a tighter for longer Federal Reserve policy. Now, some of you have been around long enough. Years ago, I said, the day's coming when you go to the bank, it will be Amazon. When you go to get your car filled up with gas, it will be at the Amazon gas station. And when you get sick, you go to the Amazon doctor. It was kind of tongue-in-cheek when I first said it, maybe 3-4 years ago. But there's a company called Hims and Hers Health. I'm not familiar with it. But their shares fell 15% today after Amazon launched a rival service that offers upfront pricing for telehealth visits. Amazon said it is introducing low upfront pricing for a clinical visit, treatment plan, and free medication delivery for Prime members for a range of common health, beauty, and lifestyle concerns. Similarly, Hims and Hers connects patients to licensed healthcare professionals through its online platform and offers treatments for a range of conditions. Hims and Hers is down $4.38 per share. And for a $23 stock, that's almost 16%. Crude oil rose after U.S. data showed a drop for national gasoline inventories, but gains were capped by the International Energy Agency's forecast of a large crude glut next year. Okay. And Mackenzie Scott. Do you know Mackenzie Scott? Well, she's a mega philanthropist. She gave $65 million to a New York-based nonprofit after unloading billions of dollars worth of Amazon stock. That's a lot of stock. The donation made in late October to community development organization Local Initiative Support Corp, and that's about as generic a name as you can get, is her largest known gift so far in 2024. The year has otherwise been relatively quiet for someone who usually gives away billions of dollars annually. That may change after Scott, the ex-wife of Amazon founder Jeff Bezos, unloaded more than 45 million shares in the online retailing giant, according to a filing last week. Those shares were worth nearly $8.4 billion as of September 30th, the date reported on the filing. She's worth $39.4 billion, according to the Bloomberg Billionaire Index. She's a pretty lady, she's 54 years old, and she is famous for her large grants to small nonprofits with little of the red tape that's typical of big philanthropy. And I'd get that wrong. In March, she said she had given away $640 million to 361 nonprofits, selected from a pool of more than 6,000 organizations that applied for grants. I believe I'm going to apply for one of those grants. I have a nonprofit. Okay, Logic 247 is our 24/7 around-the-clock E-mini alert service. Not just E-minis, crude, gold, silver, bonds. Over the last 328 weeks, we've issued over 18,300 individual handcrafted alerts. In fact, by the end of the week, tomorrow, we may hit 18,400. It's possible. Now, Valerie did this recap this morning at 6:30 a.m. Eastern. Since she did this recap, the market has moved and I've put out some additional alerts, so she'll update everything this afternoon, as she does. But this morning at 6:30 a.m. Eastern, at the time of the recap, we had issued 51 total alerts since the markets opened this past Sunday night at 6 p.m. Eastern. 2 never triggered, still waiting on the outcome of 11, plus the ones I've now put out today. So that gives us 38 actionable alerts at the time of the recap, of which 4 or 11% would have been stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, as I said, over the last 328 weeks, we've issued almost 18,400 individual alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and that simple process that we teach all of our passport holders. And so we're sitting at 11%. Still got the rest of today and tomorrow. So I guess at this point, my goal is to just not screw it up, right? Now, the logic alerts, they can come out anytime around the clock, 2 a.m., 2 p.m. Futures trade around the clock, and we have traders around the globe. So it could be 2 a.m., it could be 2 p.m., whenever opportunity presents itself. Each logic alert comes with an entry price, an initial target, quite often additional targets, and then a final trade to target. Yes, you can trade the alerts because they're published way before they trigger, so you got plenty of time to get ready, sometimes hours, sometimes days. But even though you can trade them, and that's okay, but the purpose of the logic alerts is to teach you how to read a chart. Once you've been with us a couple months, you should be able to look at any chart of any market in any time frame. And with our humble set of indicators, you should be able to know with a high degree of certainty what the next high probability move is. Now, 20% of the time, the market's going to do something other than the next high probability move. How do we know? Well, for 328 weeks and almost 18,400 individual alerts, that's what we found out. 20% or less getting stopped out on a weekly basis. So make sure you along with trading them if you choose to, make sure you use them for the real reason, to learn how to read a chart. If you want to become a consistently profitable trader, before you can learn how to trade, you really got to learn how to read a chart. So that's that. Now, long before we had Logic 247, Logic 247 is 328 weeks old. I don't know, our original alert service probably came out 600 weeks ago, 700. I guess I should sit down and figure that out someday. And that original alert service, it's called the Concierge Trade Alerts. And they're a little bit different. Mainly, they don't come out around the clock. They're published shortly after the Globex Open. Last night, they came out right at the open. We all know this is the Thursday session, but if you trade futures, you know that the Thursday session began Wednesday night, last night at 6 p.m. Eastern. Now, if you're a member or trial member, make sure you read this stuff up here because it's important. And if you don't understand something, ask, okay? So, every one of our members and every one of our trial members had every one of these targets last night, the moment the markets open. S&P 500, the Dow, the Russell, crude oil, NASDAQ, gold, silver, and bonds at the open. So let's go take a look at the charts and see just where we are today. Uh-oh. Well, this is what we've been talking about, okay? We got a doji yesterday right at the 62% fib extension. Now we've dropped to blue and climbing. Remember, I said that would be the next area where you should expect potential support. Once price gets through blue and climbing, the next area you should expect support is at the 50% fib extension, and then the 38 and the daily BBC. This green line is called the BBC. It stands for bull bear cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, we're bullish and expect higher prices, lower prices, higher prices. Now, the pullback to the BBC holds more often than it doesn't, whether you're pulling from below or pulling down from above. You can see the pullback holds more often than not. But eventually it will trade through, okay, as it did here. But as it traded through, what happened on the pullback? The pullback held. Now, markets are fractal in nature, and the BBC is as well. What I mean is you can put the BBC on a daily, weekly, monthly chart, a 30-minute chart, a 5-minute chart, a tick chart, a range chart, and you're going to get the same information relative to whatever time frame you're looking at. If you're looking for 50-point moves, probably a 1-minute chart's not your best choice, right? Okay. But it's a powerful tool. Now, here's why we really look at the daily chart. Institutional traders look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size. They've got massive accounts. They trade in huge size. They move price. So whether you trade futures or stocks or crypto or Forex or ETFs, spend 2 minutes with the daily chart before you start trading. See which way the wind's blowing, okay? Does this look like a great place for a long trade right now? Well, to me it doesn't. Not only are you getting a free look over the shoulder of the deep pockets that move price, but you're able to identify major areas of resistance and support that you won't be able to see on the smaller time frames. if you'll give me 2 minutes with your daily chart or whatever you trade, 30 days from now, you'll come to me with a smile on your face and go, man, that really helped. All alerts are created on the 30-minute chart. See, there's the green line, the BBC. Price gets above the green line, you get higher prices. Below the green line, lower prices, higher prices, lower prices. These lines here are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern. We've published the zones for our members and trial members since December 14th of 2009. This December will make 15 years. When price drops to a weekly trading zone, we expect support till proven otherwise. When price rallies up to a weekly trading zone, we expect resistance till proven otherwise. Once they're published at 6:15 a.m. Monday morning, they're carved in stone for the entire week. They do not change in any way whatsoever. Now, this is not the lowest zone. There's still 2 more zones below. But here was the opening. The vertical lines separate today, Thursday, which began last night at 6 o'clock Eastern. This is Wednesday, back here's Tuesday. So we opened and we tried to move higher. We spiked up almost to the zone, but we ran into red and falling. Okay, what was the high of that? 60.22. It actually tapped the zone. So that was resistance times 2. Remember, when price goes up to a zone, we expect resistance, and red and falling is resistance. So right there, resistance times 2. That will usually push price below the BBC, which it did. Now, price rarely travels in a straight line for very long. So you get a leg, a retracement, and a leg, and there you are at the target. Support will send the market looking for resistance. Resistance sends it to support, back to resistance, and then we traded through the BBC, and on the retracement, the pullback held, and that sent us down to the target, through the target, and the zone is 59.99/6000, and the low of this candle is 59.99.5. So hit the zone of the tick. Now these are the zones that were published Monday morning at 6:15 a.m. Eastern. And here it is Thursday. Resistance, support. Support bounced us up to resistance, which sent us down through the zone. Now we could go this way and we could find out why price stopped right there, but I would prefer that you do that yourself, because I really want you to learn how to read a chart. Okay? And I'm really going to encourage you. Some of you may have been putting this process off. Okay? As most of you know, we're being forced into a new platform, and I may not be able to do what I've done for you as I have done over the past, since 2008. So learn now while you have the chance. I don't know if I'm going to retire or not, but the more I fiddle with these other platforms, the more aggravated I get. So learn it while you can. Now, I'm not one to just give up and throw in the towel. So I'm trying to work my way through it. But I've always told you, I won't do this forever. And I hope this isn't the end. I hope I can break through and see the light of day. This is truly my hope. We'll see. what God has in store. Now notice the step line. Okay, we had the perfect stack coming down. Price, step line, red and falling, BBC. Notice on this pullback, we hit the BBC to the tick. And it sent us down to the zone and through the zone. Now the next zone's here. But if you go look over here, you can find why the market found support right there. There's a reason. Okay. Now, this step line is starting to kind of swing right. When this step line crosses red and falling, price is probably going to rally back up and attempt to get to the BBC. That's typically like up here. You see how the step line was on the left on this move up? The step line was on the left side of blue and climbing. But once that step line crossed to the right side, boom, price went right back to the BBC. Now the pullback held and held and held and held and held and held, and then it finally gave way. And a leg, and a retracement, and a leg. Okay? Alright, on the down. We opened right at the weekly trading zone. We got below it. Now, let me remind you, when price encounters a weekly zone, 70% of the time you're going to get consolidation. 20% of the time you'll get rejection. 10% of the time you'll get what's called the slice. That's when a 30-minute candle slices through a zone like it's not even there. See this candle here? It was red all the way down to here. But once it ran out of steam, what did it do? It retraced back to the zone it sliced through and continued in the direction of the slice. And where did it find support? At the zone. So this was the open last night. We get below the BBC. We got red and falling. And what was the swing low here? 44029. So we missed it by 9 ticks. And we missed the long target by 9 ticks. Interesting. So down we come, and now we've got support at the zone, same place we had it yesterday. On the Russell, here's where we opened last night. We dropped to the zone and found support. Red and falling, turned to blue and climbing, and it took us right up to the zone overhead, where we found resistance. From support to resistance, and then back to support. Here we sliced through the zone, and on the retracement, we missed getting back to the zone by a couple ticks. What was the high there? 77.3. Yeah, the zone was the zone is 2379/2380. So we've traded now through the short target, and look at that step line. It's getting ready to cross red and falling, at which point price will most likely retrace back to the BBC. Okay, from support to resistance to support. Now if you go on your chart and look left over here, you'll see where the potential areas are for the market to find support, and you can be ready for it. Is price going to just drop like a rock all the way to the zone? Well, it could. You got to embrace all possibilities, but it probably won't. NQ. Here's where we opened last night, right here, this candle. We consolidated a little bit. We're below the BBC. We've got red and falling, and so it takes us right down to the target. Market finds support. It bounces up to the BBC. The pullback held. This resistance sent us to this support at the zone, 21087/88. What was the low? 90. Okay, so we missed it by a tick. Support will always send the market looking for resistance, and resistance will always send the market looking for support. Now look at this pullback. We spiked the BBC, but the pullback held. And look where we are now. On your NQ chart, go look left. You'll see why price stopped there. Okay, doesn't mean it won't keep falling or can't keep falling and can't take out that low. But you'll clearly see why. Crude oil. Here's where we opened last night. There wasn't much of anything happening. We were above the BBC, below the BBC. That's not real good trading soil. But once we got above the BBC and red and falling turned to blue and climbing, we got a leg that was enough to get you to go for the day and plenty more. And then a retracement back to the BBC. We had the perfect stack, and it took us right up to the target and the zone, where we consolidated for a couple of hours. And then we put in a high here. Look left, find out why. A drop to the BBC, through the BBC. Now, where should we expect support? Right here. When you have a bullish cross, that's when the blue line gets above the green line. That leads to an extended move. The first time price revisits that area will almost always be good support. At least the first time down. Now maybe the next 30-minute candle will push down and close below this bullish cross. But as you can see already, the body of that candle is above the bullish cross. We spiked it a little bit. Right there's the cross. Right at the bottom of that red body. It's so important you learn this. Gold. Here's where we open, well below the BBC. And we dropped right to the short target. Traded through the target. There's a reason for this low. I encourage you to go find it. Support will send the market looking for resistance, which it found at the BBC. We pulled back to the step line, support. That pushed us up. And this high right here failed to take out that high. That's a sign of weakness. Now you see the step line is in the process right now of crossing blue and climbing. So what does that tell us? Price is most likely going to drop back to the BBC. Silver. Here's where we opened. Almost made it down to the target. So we had a leg, a retracement, and a leg. It took us right to the target. And then a leg, and then a retracement. Now notice, quite often, you'll see this on these CTA short and long targets. Once price trades through, it will often pull right back to the target. And on a short, when it pulls back, it becomes resistance. Send us down here. Go look left. Red and falling, turned to blue and climbing. We got back above the BBC. And we were on our way to the zone overhead. But look at the horizontal line on my cursor. See this right here? We couldn't break through, get above that high. That's a sign of weakness. Plus the step line crossing tells us that we're most likely to retrace back to the BBC. One last look at the daily chart. We are off the low of the session. Blue and climbing is still acting as support. Once that gives way, once the body of this candle gets below blue and climbing, expect support here at the 50% fib extension and then the daily BBC. Now, by the time it gets here, the BBC may have risen a little bit, but right now you've got support times 2, the BBC and the 38% fib extension. And then right below that, you got a bullish cross. You got to expect support there at 58.70. Okay. And then down here is the 24% fib extension. I talked the other day, I said, guys, it looks like we're going to get into a rounding top here. And here she be. Just got to be patient and let it do what it's got to do. All right. Again, to become a member, send an email to support@cfrn.net. And in the subject line, just put, I would like to become a member. Valerie will send you all the information you need to become a member and be in the members only workshop tonight. Michael is here. He's going to give us a recap of what happened in the live training room this morning. Then we'll do some live trading on the TradingView platform. And then I'll come back and wrap up the broadcast with our good word for the day.
Excellent.
All right, looks good.
Good. Here we go. Here we go. Good afternoon, everyone. Today is Thursday, the 14th day of November, 2024. So today, if you want to take the free trial and you have not taken a free trial with us, go here to mytradingiq.com. Right here is what you click on to sign up for the free trial. Click on that. There is no credit card required for the trial. Okay, click on that, and that will bring you to this registration page. On this page, all we ask for is your name, your email, your phone number. There's no credit card required in here. Bunch of multiple choice questions, 5 multiple choice questions, and down here at the bottom, if you have TradingView, give us your TradingView login ID. If you don't have TradingView, go get the free version of TradingView and give us your login ID so we can get you set up with something on your charts. Okay. The free version really is free. You will have to pay for real-time data, but you don't even have to pay for that just to see stuff work. You can use delayed data just to see things work. You just won't be able to trade. If you have NinjaTrader and you want to use our charts, what we have for NinjaTrader, then give us your machine ID for NinjaTrader and you get set up with that as well. Okay. If you're not going to use the charts on NinjaTrader, then we don't need the machine ID. If you're just going to trade with it, that's fine. Just trade with it. All right. Spreadsheet. It took us right up to the end today. I started out in a hole and I stayed in that hole for a while because there just wasn't a lot of opportunity. So today, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 14th day of November, 2024. We made 36.6 on the NQ. We lost 25 on the Russell, lost 25 on the YM, made 19 on gold, and made 6 on the ES. That put us at plus 195 in the morning session. Today, it took 115 minutes. That's almost the whole morning session. And 22 trades. That's like almost all the other trades I've taken this month added up, getting the goal. If you take out that first day, it would be pretty much maybe the first 2 days. But anyway, and at that point, we're up $1,375 with 11 contracts on. That took us, and we took a total of 23 trades. So after that, we took one more trade, and it was in gold. We took one more trade, and we got 6 ticks profit, I think. So on, we get 6 ticks profit, 7 ticks profit. On the month now, we're at $3,810 over 10 business days, averaging $381 per day. And on the year, we're at $104,180 over 214 business days, averaging $486 per day. Now, if you were to quit trading when you get the goal for the day, and you were to add 1 contract per month, so far this year, you would have only had to trade 64.25 hours, and you would have averaged $2,890. This went down like $60 from yesterday because of the time that it took today to get the goal. You know, this adding a whole 2 hours to this was significant. But it is what it is. We ended up taking almost the whole morning, and we almost had a red day. You know, well, I had forgotten that I was up. I had forgotten that I was up 9 ticks on the gold, and I hadn't put that in. But when I was thinking that, we were down at like plus $5 or something like that. But for the longest time, we're at minus 195 or minus 230 or minus 300 and something. It was a challenge this morning. But anyway, we did it. We got it done, as we usually do. Given enough time, we always get it done. It's just a matter of having enough time. Let me bring up the questions and see if anybody's asked any questions yet. Don't see any questions yet. Okay, so I've shown you how to take the free trial. I've shown you what we've done for the day. So now let's just get into the trades. All right, so this is the gold over here. And one thing that I've noticed today about the gold that I noticed before, but if I have drawing objects here, if I've been doing it with the GC1 exclamation point and I have all these drawing objects on it, and then even though I've got the drawing objects in exactly the right place, the right numbers, if I switch this to the GC and then go to Z, suddenly I don't have all the drawing objects anymore. It kind of freaked me out this morning when I saw that happen, because I knew I had all this stuff drawn in here. But the GC1 is what we're using this morning. That's the leading contract, in case you don't know. That means it's the leading contract. So when it comes to rollover time, if you have the GC1 selected, it's going to automatically roll to the leading contract. Okay. So the trades that we did take on the gold here. Now we stopped trading the YM this morning, well, because it just wasn't giving us a whole lot of opportunity. We stopped out in the first tick, and I took a look at gold and it looked like gold might give us some more opportunity, more than the YM, so I traded gold. And I'm guessing I was probably right. When I go back and look at the YM in a minute, we'll see. But the first trade that we took on gold right here, we got 5 ticks profit. Then we had a break even there, a break even there, and we got 4 more ticks there that got us to plus 9. Then 3 ticks there that got us to plus 12. The diamond principle that we were talking about this morning, it never did finish that. Okay, but it did it over here. It's setting up another one right now. But at the end of the day, this one right here, we added that on right. Actually, did we add that on? This one is the one we added on. Right? Because we went from 5 to 9, 5 to 9 to 12, and then right at the end of the day right here, this last one, I guess I didn't put my arrow on that one. It was right there. We got one more right there for the 7 ticks at the very end. And that is how we ended it on the morning session for gold. Let's see. During the break, it looks like there was one trade right here on gold. That would have been tough to take because the swing low was right there. But you only have to get 5 ticks in profit. So I guess it would have been okay. If the entries are at 76, it was going down, the swing low was at 75.5. That would have been tough to take, really. The next one was over here, and that looks like it probably would have stopped out with a 15-tick stop on a 9-tick range. That would have probably stopped you out to the tick. And there's been nothing else on gold since then. All right, and that was gold. Now let's make it the YM. Make it the YM and blow that up and look at that on a 19 range. And again, move it around. This was the one trade we took on the YM this morning, was right here. And it stopped us out, and all the markets at that point did not put in a lower swing, so I was thinking it was going to turn around there. And it did for a few minutes, but then it came right back. Looks like there was a trade here you could have taken, a trade here you could have taken on the YM. Then it switched directions. There was one there you could have taken, and one there you could have taken. No more in this direction because it didn't put in a higher swing. Nothing in this direction. The ribbon's all messed up. So there were some pretty good trades there on the line. That one, that one, that one, and that one were all positive trades. And then you get into the break. Even during the break, there was a good trade right there, though that would have been questionable because it's so close to the swing low. But once it put in a lower swing, you could have taken this one. That would have been a stop out to the tick, I think, probably. And that was it. That was it for the YM. So the YM wasn't bad today. I just stopped trading it because the gold was better. Now the Russell on the 19 range. This is where we started out with the Russell this morning. I was drawing all that in there. I think that was part of today's lesson plan. I started out with this stop out right here, and I put in one or two ticks higher right there, and I took this one, I tried it again, and I stopped out on both of them. So it was minus 50 ticks on that at that point. Then right here, I got 20 ticks back right there. I get to minus 30. Then here, I got 5 ticks back. That got me to minus 25, and that was where we ended it with the Russell. Now, during the break, it looks like there was some nice movement here during the break. There was one right there, one right there, one right there, and one over here. This would have been a stop out. Okay, but those 3 right there, enough to get the goal for the day and quit trading. The ES now. The ES. Let's see. On the ES, we started out with the stop out right here on the ES. We got minus 10 on the very first trade. And I was saying when I took that, I was thinking we were going to have a lot more opportunity than we did today. But I was wrong. Because I was saying when I took this trade that, we're not really, like, I wanted to see it get down below this level back here. I was questioning whether this was a good trade or not, because I really wanted to see it down below this level, but we never got a long trade. After we got the shorting opportunity right over here, where it never put in a lower swing, we never got a long trade. So I was readjusting the swing low to over here. So I took that right there, and the ribbon wasn't exactly right. It was a stretch. It was a stretch, and it was in the pre-market. So I figured, no big deal. It's in the pre-market. I'll get this back in no time. We have 2 hours from now, and well, heck, we didn't have a lot of opportunity. We stopped out on that minus 10. Then on this one, we picked up 2 ticks to get us to minus 8. I got to break even on this. Then I drew this out to where price should go based upon the larger time frame stuff, and you can see it did go down there and hit that. These were some numbers I was seeing in here where I thought price was going to go down to, but it never made it down there. But it turned out here we got 6 more ticks there to get us to minus 2, and we got 8 ticks here to get us to plus 6. We ended up with a break even on this trade right here. Now I could have gotten the goal for the day on that trade if I'd have known I was so close to the goal, but I didn't know. But I could have taken 1 tick on that, and that would have been the goal for the day there. But as it is, it worked out anyway. During the break, let's see, we had the weekly trading zone right here to be concerned with. So this first trade here would have been okay to take. It gave some pretty good movement. It gave you enough to get your stop to break even. Didn't really put in a lower swing. So you probably wouldn't do the next one that gave you that nice leg. You would do this one right here. These are not weekly trading zones. These levels right here, they're not weekly trading zones. Okay. This next one right here you could have done. It did not put in a lower swing, so you would not have done this. This one did give enough to get the stop to break even and take profit. And when it did put in a lower swing, there was another trade right there that you had to wait for a lower swing on. And that worked out well. Then you had this right here that was just enough to get your stop to break even right in there. Then nothing else in that direction. Then this right here, again, just enough to get your stop to break even and nothing else in that direction. And this just happened a few minutes ago right here. Right, and that's where the ES was. We ended up with plus 6 on the ES this morning. All right, and on the NQ was not moving around all that well this morning either. If we go all the way back to the beginning, let's hit Alt and back on this. Well, I guess I didn't have to do too much work on that. Here we go, our first trade on the NQ. Now, I wish I would have let this run, but I didn't. The first trade on the NQ is right here. We picked up 4 ticks on the first one. We had to break even on that one. And this is what I said it should do, and it took a long time to do it, but it eventually did do it. None of those are good arrows. I was doing something. I was showing how something worked. Then we drew this in using the diamond principle. All right, but the next trade that we had, we went from 4 to 8, from 8 to 16, so we had a plus 8 there. Then from 16 to 32, so we had a 16 tick there. Then we went from 32 to 36. Hang on, I'm missing something in here. You had 4. Then here we had 4 more to get us to 8, and 8 more to get us to 16, and 16 more to get us to 32. Then 4 more to get us to 36. I think that's right. Okay, and then we had a break-even trade right here. And it didn't finish the diamond principle in here. It didn't finish it here, and it didn't finish it on the other one that we were looking at it on. Well, it did eventually finish it way over here. during the break. Now, right, we didn't trade anymore in there, and then during the break, let's do it like this. During the break, we had one trade right here that was going into the zone, but you could have taken it down to the zone, which would have been okay. After it got through the zone, there was one right here that would have been very close to stopping out to the tick. You know, with a 25 tick stop on this. If your entry was here, actually this is a 36 tick stop. Sorry, this a 36 tick stop. So your entry is going to be your stop is going to be 9 points away from your entry. So from 72 would be up at 81 is where the stop would be, and this went up to 81.50. Right, 72 would be 83. Sorry, 83 where your stop would be. Is that right? No, that's wrong. It'd be 81 where your stop would be. 31 range, the stop is 36 ticks. 36 ticks. 72 to 82 is 10 points. So 72 to 81 is 9 points. Yeah, so your stop would have been right there. So it would have actually stopped you out to the tick before it went down. Did put in a lower swing, so you could grab the next one, and the next one did the same thing. Now, Miles, are you in here right now? Miles is not in here right now, but let me go over this anyway. One of the things that I went over this morning, and I'll probably go over it in the partners meeting tonight, because Miles will probably be in the partners meeting tonight. But these trades that pulled back really deep, I was going over how, you know, on trades that pull back up to the ribbon, especially after the first bearish cross or bullish cross, I like to see price hit the ribbon like this one here. And on an occasion like this, where it's almost at the ribbon, I would wait for a pullback into the bar to enter, because then my stop is going to be up here. Okay, so if it does go back and bounce off the ribbon like I really fully expected it to do, then my stop would be up here. Instead of entering down here where my stop is right here, right at the ribbon, my stop would be above the ribbon if you wait for the pullback. You end up missing some trades doing that, but like this one right here, if I did the same thing here, it wasn't actually a trade, but if I did the same thing here and I waited for it to pull back up here, so my stop would be up here, I wouldn't have gotten a fill. But let's see, more trades. This one right here, it looks like this was probably a trade. This right here was a trade that would have stopped you out, and that would not have been a valid trade because of that. It changed directions, and you get all the way over here, and there was a long trade right here that went enough to get the stop to break even, so you wouldn't have been able to take advantage of anything else in there. So the markets were messy today. They were not terribly easy to trade. I wish I would have gotten a goal on the very first trade. And, you know, my very first trade, I stopped out on the very first trade, was on the ES in the pre-market. That one I kind of screwed up. And then I thought I was going to get it on the next trade with the Russell, and I stopped out on that one. And then I thought I was going to get it back on the next one with the NQ, and I only got 4 ticks. And then I thought I was going to get it on the YM, and I stopped out on that one. So I was in the hole pretty deep at the very beginning of the day today. Took me all morning to get out, but we did it. We got out, just following the plan again and again and again. All right, so for anybody that's coming in right now on YouTube, if you haven't taken a free trial, let's go here to mytradingiq.com. Right here is where you sign up for the free trial. There's no credit card required for that. Jay, you did get that email that I sent to you last week, right? You asked me to send you an email. I think, did I send it last week, or was it earlier this week? I asked me to send you an email, and I did with some information. I just saw you in here. So if you haven't taken a trial and you want to, click here. Even if you have taken a trial and it's been a while, you can click here. No credit cards required for the trial. You can take it again. If you just took the trial, then you can't take it again. But if you took it like a year ago, then you can take it again. Do that. It's going to bring you to this registration page where all we ask for is your name, your email, and your phone number. And once you give us all that, we'll set up your indicators for you. If you fill all this out all the way down here to the TradingView part. If you fill all that out, then we'll set up your indicators for you, get your indicators indicating, and you'll be good to go. All right. So now we can trade a little bit. We just had this commodity oversold on the ES. It should go up into the weekly trading zone right now. It's not the greatest looking trade. I'd like to see a little bit deeper pullback. Okay. All right, you are on a plane. I used to do that. Used to go to Boston all the time on Fridays. Leave on Friday and come back on Sunday. All right, so we have a higher swing here, And we're about to get a higher swing here, and these two markets aren't giving us anything. So what I was curious about, I went and looked at Bitcoin earlier. I went and looked at Bitcoin earlier today, and the candle was a little more red earlier when I looked at it. So there's a chance it could recover some today. We had all new highs again yesterday, and so that's what we're looking at with that. We go out one more. I don't know what we have one more out. Silver. All right. So silver today has actually made a big move up. Dwayne's probably covered this already. This is on the daily. No, this is on the annual. All right. So silver may not have done anything today. Let's see. Put it on the daily. Okay. So silver is it's higher than the open today, so it's up a little bit right now. All right. The open was at 34.15, and the current is 35.75, 35.80. So that's what, I don't even know how to determine the ticks. 58 minus 42 is 16. So it's, I think it's 16 ticks, I think, I'm not sure. You know what I'll do? Do I still have this thing going on? Yeah, I do. Let me just do Shift D, and we'll see. So that bar that I was looking at the open. The open was at 415. The high was at 635. 635 is up here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 ticks from where we are right now up to the high. I don't really trade silver, as you can see. I have bought the actual silver in the past, but I don't actually trade it. All right, so the YM, just looking at the YM here on a 19 range, just using the regular TV trades. So far today, it's had 3 winning trades. One there, and one there. Using just basic TV trades, I don't think I have anything special turned on. No. I have the longs and the shorts and the bias. If I shut the bias off, it probably has a couple of longs in here too. Yeah, see, along there, along there, along there, and along there. But if you put the bias on, you're trading in the direction of the longer term trend. Okay. And that's what that looks like. And we'll have one more, and it's what we had out here yesterday. Tesla looks like. Oops, that's YM again. Let's look at Tesla. Now, we were looking at Tesla because it was up 50% since the election, is what we're looking at yesterday. It's having a retracement of that 50% gain, but it's almost a healthy spot right now for it to start bouncing again. For me, a healthy spot is 50% retracement. Okay, 50% would be right down here at 299, 300. That's perfect. Go down there's a psychological aspect to it too. That'd be perfect. 50% retracement, bounce off of 300 right there. So if you only had some way, something that told you when to get in and when to not get in, that's on a 30-minute. Now, if we put this on 100 range, and we'll blow it up a little bit, and it's in a downtrend. So if every time it came out of the overbought in 100 range, that's $1. $1. Okay, each bar is $1. Every time it came out of the overbought, you would be doing pretty well. You'd only have one there that didn't work out well. And it takes at least 2 bar lengths, 2 bars to get from overbought to oversold. So you'd be looking to make $2 on every time it comes out of the overbought versus losing $1. You're risking, 1 to 2. Risk reward or reward risk. Risk reward. Risk reward is 1 to 2. And you could be doing much more than that. If you had, if you put the context PP on here and you had all the targets drawn out for you. Like right now, we're at 315, but you would have gone short. Let's say it went short up here on this down close at 318.36. The first target was right here at 316.94, which it hit. The next target was at 316.28, and the next target down is at 311. So it's thinking all the way down here at 311. Now, if you put a line there where it says 311.6, I'm just doing this so you guys can see what you actually have in front of you here, because I don't think everybody looks at it. It's looking there, all the way back here, this pivot right here, to come up with that number for you. So it's looking all the way back to the 8th of November. Hey, my birthday. It's looking all the way back, a few days back, to find that number for you. So that's what it's suggesting it's going to go to. If it gets down through this swing low right here, I would bet that it is going to do that. All right, if it gets below that swing low. But you can see how the ribbon got crunched up right here, and it's possibly going to turn. Sorry, rabbit hole. I know. I got on them pretty easy. We didn't really come out of the oversold here, so this isn't really a trade setup. We did come out of the oversold here after a higher swing, so this is a valid trade setup here on the yes. I don't have it on, but that's a valid trade setup. This is nothing, and this is nothing. Okay. That is what's going on. All right. Does anybody have any questions about any of this stuff? There are two trades triggered right now. I'm not in either one of them. The ES would have had my stop at break even, and the NQ I would probably have it at break even right now. I'd probably be getting out of break even right about here. Okay. Other than those two, nothing else is triggered. When I was looking at the gold over here, I had the gold on the 9 range. Right, we do the GC again. I had it on the 9 range. Right, and one of the things we're looking at today with the gold, for one, we're looking at the diamond principle in here to see if we could get it to go up to that level. It didn't, it failed right there. The whole diamond thing failed right there, but it did duplicate itself over here. All right, if we take the same principles, this being your price and this being your time, take the same principles, then this is going to be your price and this is going to be your time. Okay, so that's what you expect to see happen roughly in that time frame. It did eventually go down that level, but that's the whole principle. I guess I could call it a different thing. I like the diamond principle, but it's really could be a 90-degree principle, a right angle principle, something like that. But I like the diamond thing because it takes on the shape of a diamond. If you go like this, it went up like this and down like this, and you expect it to repeat that and just sort of flip it over. You expect it to repeat that. So get down to this level, well, whatever this is here, which would be down at this level. You expect it to go down to here and back up to there in this amount of time. You see. That's what we're expecting up here, but it didn't work out. But it did work out here. It worked out here, 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 here. And it stopped right here. This is the one that didn't work out. Then it flipped around and it worked out here. And then once it does work out right here, it starts over again. So ignoring everything else that's going on here, now ignoring the ribbon and everything else that's going on, what you would be looking at is this. Let me draw it for you. You'd be looking at this. That leg up. This has got to exceed this right here for it to be valid at all. It's got to exceed that level down there. All right. If it does, then you would anticipate it's going to repeat that whole process. Okay. So basically, what it's saying is, you get this leg length, you repeat it like that. You see what I mean? Except usually in there, it doesn't, I mean, this is geographically, no, geometrically. This is simple to draw like this, but the way it usually works, I mean, the way it does work almost all the time, is you get this and you get this and it goes through it, and then you get a pullback, and then it does the rest of it like that. All All right, and that goes in line with everything that we always say. Price is moving like this. All right, so the whole diamond aspect starts here and repeats itself all the way down to here, and then again all the way down to there. And the mid trend. Okay, that was all I had for that. What time is it? It's 1:25. Wow, it is pouring down rain outside. All right. Well, that was a whole lot of drawing on that chart. And now if I go back to the YM, all of that will go away. Go back to a 19 range here on the YM. This morning when the markets were really flat and sideways, I was considering dropping the ES from a 7 range down to a 4 range like we used to do back in the day. If I had done that, if we had gone here to a 4 range this morning, then let's see. I have to go back to the beginning and see how the trades matched up. All right, so from the 4 range, we wouldn't have taken this trade for sure. We would have taken something here, but we weren't trading at that point. We could have taken something there and there, right there. Then nothing else on that side, right here. And once we moved all the way through there, right here, right here, right here, right here. That was all before 9:45. So yeah, it would have been a lot easier to trade the 4 range this morning. And there would have been no stop outs yet, and probably several winning trades. Something to consider. Something to consider the next time. Next time we get into some choppy situations like that. We've never had this thing here to use on such a small time frame as the 4 range before. We've never had that before. That we've never really looked at it on the 4 range. So it introduces a whole new dimension, really. Before when we had the ultimate slingshot, a lot of them match up, a lot of them don't, and the ones that don't would stop you out over and over again. But this one is a lot more accurate. So if you have the right trend going here with your ribbon, then it's a lot easier to get in there and stick with the trend and take the trades with the trend. It's a lot easier. Those of you guys who really want to scalp, you get in there and take these trades again and again and again. And as I say again and again and again, you're not trying to trade 1,000 times a day. You're trying to get in there and get your goal for the day. And by just looking at this on the ES, which we struggled with today, we could have gotten the goal several times in the first 15 minutes. Several times. This is a 4-tick range, so you need 2 bar lengths to get the goal. But this one right here was enough. This one right here would have pulled back. It would have been a break-even trade right there. I didn't put it in a lower swing, but this one right here was just about enough. Let's see, in here, this one right here was about enough. You need 2 points, right? So if the entry's here at 16.25, it dropped down to 14.75. So that's 2.5 points. Oh, I'm sorry, it's 1.5 points. Yeah, 1.5 points. But over here was enough. Over here was enough to get you stopped to break even. But just a lot of opportunity. I'm going to have to think about that if we have the same type of markets tomorrow morning. Don't really need it right now. Well, actually, you could use it right now. Think about it. Everything's all crunched up here. On the 4 range, even it's crunched up. So on the 7 range, it's probably going to look even worse. Yeah, see when it gets crunched up like that on the 7 range. It's a little bit of a mess. Anyway, guys, I've talked through this whole thing this morning, and I don't think I took a single trade, did I? I don't know. I don't remember. Anyway, if you have not taken a free trial with us, go here to mytradingiq.com, sign up for your free trial right now. Here, right now. All right, if you sign up for it today, you get today, tomorrow, and all the next week on the free trial. Right, there's no credit card required for the trial. Just click that link. It's going to bring you to this registration page. All we ask for is your name, your email, your phone number. fill out all these boxes if you can, and we'll get you all set up, get your indicators indicating at the beginning of your trial. All right, it's Thursday. Partners meet tonight, 8 p.m. If you have questions you want answered, mail them in ahead of time. I'll try to get to those questions first. And that is it, guys. With that, I am going to wrap it up and pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Plane is ready.
Recap of the morning session.
All right. Today, it took 115 minutes. Wow. 115 minutes and 22 trades to get to $1,375.
Good job.
Thank you. Thank you.
Okay, guys, we'll take one last look at the daily chart. We've covered all the markets already. If you missed it, when I end this broadcast, about an hour later, you can go to youtube.com/CFRN and see the broadcast in its entirety, along with over 2,600 other daily episodes. Just waiting for price to hopefully today close below blue and climbing. That's going to bring us to support here, probably give us a little bounce, and then we're down to the daily BBC, and this is the rounding top that we talked about when it right after we put this high in and closed down like this. That was the day that I first mentioned it, and that's still what I foresee, because price always reverts to the mean. In our case, the mean is green. It's called the BBC. So how we close today will be very important, and probably point us in the direction of how we're going to close out the week. So, to become a member, couldn't be simpler. Send an email to support@cfrn.net. In the subject line, just say, I would like to become a member. Valerie will email you the information you need to become a passport holder and be in the members only workshop tonight. Once you become a passport holder, you'll have 2 hours of live training in an interactive environment every trading day. That's something 9 out of 10 new traders don't have. Probably more than that. It's probably like 9.9. But anyway, no matter what you want to be in life, a pilot, an attorney, a baker, a candlestick maker, I don't care. You need somebody to teach you how to do it. Now, I know you buy courses, you watch these YouTube videos, maybe you get into some room with a grumpy guru, but that is not the same as having a living, breathing teacher putting on, taking off trades live in real time for 2 hours every trading day, explaining every move they make, every trade they take, and the reason why. That's what you need if you want to become a consistently profitable trader. So, the ball's in your court. You can continue to chase the Holy Grail where you never get stopped out again, all the false promises. You know, I don't know how much time and treasure you have left. But I guess the bigger question is, however much time and treasure you have left, how much of it do you want to waste? Or do you want to just get down to brass tacks and learn how to trade? Because that's what we offer you. On top of the 2 hours of live training every day, you have access to private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again, a never-ending cycle. Also, as a passport holder, you'll get the Logic 247 alerts around the clock. You'll get the concierge trade alerts. the moment they're published each evening after the Globex Open. Every Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. And remember, once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. And of course, you'll be able to attend the members only workshop every Thursday night at 8 p.m. Eastern. That's tonight, if you've been on the trial. You also get the golden key that opens all the private channels in Telegram, like the members only workshop. Okay, yeah, you could attend the meetings live, but we have a channel that has hundreds of previous members only workshops. Do you need to watch them all? No, but it's nice to know you've got that wealth of information and teachable moments if you really want to learn how to become a trader. What I'm saying is, it's everything a trader needs, all under one roof, one low price. Now, when you're on the trial, there's a discussion group where you can talk to our traders. I don't know of anybody that lets you talk to their traders before you pay them the money. During your free trial with us, you can mix and mingle in the discussion group with our traders. You don't have to believe us, believe them. The ones who came to us, beaten down, broken, with battered trader syndrome, and now they've found what they were looking for. So what we have to offer may not be for everybody, but the only way you'll know is if you take the trial. And then, if you like what you see, become a member. You've already taken the trial. You know what to do. Just send the email to support@cfrn.net. All right, our good word for today. Yesterday, it was about being joyful. Today, a question. Who can you count on? Philippians 2:22. Timothy has proved himself. See, when somebody has proven themselves, you can count on them. God will be faithful to you, come what may. Humanly speaking, who else can you count on? Paul writes in Philippians, everyone looks out for their own interests, not those of Jesus Christ. But you know that Timothy has proved himself, because as a son with his father, he has served with me in the work of the gospel. Paul knew he could count on Timothy. Who can you count on? Before you answer, consider the following 4 questions. Number 1, when something goes wrong, do you have at least one friend you can easily talk to about it? A friend loves at all times, and a brother is born for a time of adversity. Proverbs 17:17. There is no way to put a price on such a relationship, right? Number 2, who in your life could accurately name your greatest fears and temptations? 2 people are better off than one, for they can help each other succeed. If one person falls, the other can reach out and help. But someone who falls alone is in real trouble. A person standing alone can be attacked and defeated, but 2 can stand back to back and conquer. 3 are even better, for a triple braided cord is not easily broken. It's Ecclesiastes 4:9. Number 3, do you have one or more friends with whom you meet regularly? Those who feared the Lord spoke to one another, and the Lord listened and heard them. So a book of remembrance was written before him. Malachi 3:16. And number 4, do you have a friend you know well enough to trust their confidentiality? Proverbs 11:13 says, a gossip betrays a confidence, but a trustworthy person keeps a secret. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.